Good afternoon, everybody. Today is Friday, the third day of December 2010, and December is sure off to a strong start in the markets here. Let's take a look at this S&P 500 to begin, and let me just center that a little bit better here. I think we're live. Okay, we are live. Okay. So anyways, like I said, off to a good start here for the month of December. And, we continue to just climb this wall of worry. And as I was referring to some of these headlines, they've just kind of been bricks in that wall of worry. And today's unemployment number kind of added, another brick here for the market to climb. So it looks like I've got to adjust this just a little bit so you guys can see those numbers on the right-hand side of the chart a little bit more clearly. So let me just crop that in a little bit more closely, and we should be good to see that now. So again, we've had look at the news we've had lately with the dollar, Korea, the pigs, all that stuff. I don't even really pay a whole lot of attention to it, truthfully, because it ends up being a huge distraction to the only thing that pays. And as we know, what I'm going to say there is there's just one thing that pays, and that's price action. It doesn't mean that we shouldn't be aware of what's going on in the world or the companies that we're trading, but really, if you were to form an opinion about the markets based on what you read in the newspaper, it would be a pretty tough environment to make money in. And by the way, I have no idea what manpacks are. Actually, I clicked on it earlier, but I don't use manpacks, and I don't know why that's on there. But who wears briefs anymore? It's all boxers. I don't understand that advertisement. But anyways, let's take a look at this market here and get back on a serious track. So the S&P 500 for the week, obviously we had a big week here. We had the market come down and test that rising 50-day moving average. We spoke about how the 50-day moving average is generally, we want to look at the market as innocent till proven guilty, but you don't want to necessarily buy down at that level. Well, we had the gap higher up through that 120.30 level, and from there the market has really just taken off. So I don't know what I was drawing there, but I was talking about the potential for where we were going to be in the S&P 500 based on the gap lower. But obviously, this market hangs real tight. Just a series, since that breakout of that resistance, it's been a series of higher highs and higher lows. And we've got to look at the bigger time frames really now to say, where does it have the potential to go? And I think this is probably a closing high for the year. Let's take a look. This previous closing high was 22.92. So I guess we're not at a closing high for the year, but close enough to call it, I think some people are just calling it now a bull market. I don't know, but here's where we are, and it looks like we still might have the potential, I think, even by the end of the year, to get up towards that 130 level in the SPY. Now, this might be another level that people focus on because we have these little spike lows here from 2008, so near about 127 or in that general area. But rather than focusing on upside objectives, the better way to handle the market is to manage risk and say, we're above these key levels. 120.40 is going to be a bigger level if we get a deep pullback, but I don't think that's really likely next week. I think it's more likely that we continue to just kind of grind higher here, and the biggest recipe here lately has been stocks with big short positions. I mean, you look at it, even a stock like today, it broke out a couple days ago, but really got added to it today, and I think it was primarily because the shorts got murdered in here, is this Gentex. These guys make automatic dimming rear view mirrors. I mean, what an unsexy, non-growth business that would appear to be, but it broke out and is it up at these all-time highs, and has some shorts really trapped in there. If you look at the, I'll pull it up here in a moment, but if you look at the short position in here, that to me is really what seems to be driving a lot of these, stock movements. So if we take a look in here, for instance, in the NASDAQ site at GNTX, and we searched that, 5.7 million shares were short coming into a couple weeks ago at least, and when it's at all-time highs, there's only one way to stop the bleeding, and that's simply to buy the stock back. So I've heard it a couple times recently, that is in the last couple days, which is the risk trade is back on, and that greed is back into the market, and people aren't as fearful. Well, it's never quite that simple, because you can't say that this GNTX breakout was based on greed. It was more of a move based on fear that you're going to lose all your money because you're short this stock, and theoretically the upside potential is unlimited. And when it starts going from 10%, 15, 20, 17% in a day, and you're short this thing, you basically have to buy the stock back to stop the bleeding. So of course there's people in there trying to jam those shorts higher and being greedy because they know they're in a good environment, but there's also a lot of fear that gets involved in the market in movements like this. You take a look also at some of the obvious things that were pointed out to us last week, such as looking at the GLD and this obvious head and shoulders pattern. Well, we talked about it on Wednesday and said how that that head and shoulders pattern, the right shoulder, was broken. That a lot of times that these very heavily advertised patterns do not work, and realistically, we're still in an uptrend with a rising 50-day moving average. In that weekly time frame, of course, there's no sign of any slowdown really in momentum here. We're testing that 50-day moving average or 10-week moving average a couple times in GLD, and you can make the only argument you could have made really is that it's getting ahead of itself. But we've digested some of these gains in the gold market. We've sucked in short sellers. Now they're getting squeezed, and the cycle continues to be vicious for those who try to pick a top. And you look at a stock like DECK. And I'll admit I fell into this trap this week too, but you have to be able to cover your losses quickly. But DECK, has had this massive rally, but it's still in a giant uptrend. It's above a rising 5-day moving average, and at a minimum, it's going to need to crack that before it can sustain any downward momentum. There are, if you want to look at a stock like DEC and try to short it, picking a top really, like I said, I try it once in a while, but I scramble away real quick and realize that again it is what I'm going to call it here, which is a fool's game. But if you want to profit on the short side from stocks that are up a lot or overbought, look at stocks like VHC. VHC had this huge rally when it broke that 20-day moving average. That's when it got hit. Not selling short into that momentum. Same goes for MCP. Not selling short into that momentum. It was a 20-day moving average break in here as well. If you look at MOTR, which has been a big stock, it broke that 20-day moving average a couple days ago. But trying to sell short and pick the top in here, again, that's the fool's game. You need to let them kind of settle out and then break some important support levels, and then decide whether you want to get involved in a what's still a counter trend trade, but can be a very profitable one when you see the evidence developing. But a stock like DEC, there is no evidence of developing weakness in there, and it just continues to be, in this case, in shares of DEC, I think it's what I like to refer to as a continual or perpetual short squeeze machine. Not perpetual, but you get one group of shorts that get squeezed out, then another group of shorts looks at it and says, hey, that's up too much, I'm going to try to pick the top, and they get squeezed, and then it continues over and over again. Meanwhile, there's some evil force who's behind the scenes buying the stock up and trying to squeeze the shorts. It's not some evil force, but there's someone who believes in the stock or believes in the ability to squeeze these shorts, 4.2 million shares in DEC, and say, you guys are wrong, and we're going to force you to pay up. So that's really kind of what's happening here. On Thanksgiving, I had posted a link on Twitter as well to 90 stocks. Actually, I called it 90 stocks, but there were only 89 of them because there was the header on there. No one called me out on that. I was surprised because people are usually pretty meticulous about those things. Anyways, that list, I'll republish it here or something similar this weekend, but it was simply stocks that are in an uptrend with a big short position. And what I defined a big short position was a short interest ratio of at least 5. If you're not familiar with what short interest ratio is, what I'll do is I'll actually repost that short squeeze article that I'd written a while ago. But let's get back to taking a look at the markets. The NASDAQ, as I've been saying, seems like it's magnetized to this $55 level, and there's just nothing to look at and say that it doesn't look like it's going to head there. Now, it doesn't mean it's going to head there next week, but at this pace, obviously, it very well could be. We have a pattern of higher highs and higher lows, and it just don't fight that momentum. There's really not much more to be said about that. When the market is in an uptrend, what we need to do is we need to focus on risk management and low risk entry points into new stocks if we're buying new stocks. So, today I had mentioned 2 stocks, and it's easy to pick winners in this stock. In this environment, that is. I'd mentioned PNK was looking like a good entry right over here at 1385, I believe it was. And PNK, you can see, nice breakout on this daily chart past some resistance, and the weekly chart looks like it's got some room to run as well if it can clear this bigger area, which I think probably it's going to do next week on the weekly time frame. And part of my reason for being bullish on PNK is it's casino, and you had stocks like MGM today, Boyd Gaming, which we talked about in the chat room at Boyd we spoke about right at this level right here. But anyways, these, when you see a group going, you want to look and say, well, what else is in that group? And PNK was, another casino that I've kind of had my eye on it anyways. It trades about 500,000 shares a day, but you look at that weekly chart, where does it come from? Where does it have the potential to go? It's digested some of these gains in here. And again, that's exactly what the market did. The market digested the gains. The S&P came down to the rising 50-day moving average. It bounced around in there, found support, brought in some more short sellers. People were calling this the end and that sort of thing. And you can't make it a one-dimensional call. You have to look at it on multiple time frames and say, we have to be cautious in here. But when it breaks that range, that's the range we're looking for. It's time to, put the party hat back on and manage risk and look for, not just to chase things, but look for the low risk entry points into an established trend on a daily time frame or a weekly time frame, but find the low risk entry points on those shorter term time frames. So CVH is another one. This is, it didn't really get going that much here today. But Coventry Healthcare is another stock that, next week or the week after, if we can break these levels where it's had some resistance recently up near 26.5, 27, it's probably a $30 stock pretty quick. And the nice thing is we have what looks like a good higher low to protect ourselves with as far as a stop goes in a stock like Coventry Health. The IWM, that's the Russell 2000, getting back to the market, has, as we know, been the stronger market, as it is up at highs for the year, and it's up at highs that haven't been seen for actually a couple of years here. So we're hammering away at these levels back from 2008, and if we can continue to push past this important level in this general area, I mean, you could look at this and say, hey, we're at resistance. We're not at resistance though, because we haven't slowed down one bit. It's not resistance yet. It has the potential to become resistance, but it appears as though this market wants to continue to move higher, and instead of saying, well, it's at resistance, I'm going to sell everything and I'm going to go short, you say, I want to manage risk on the shorter term time frames, and as long as it continues to show this pattern of higher highs and higher lows, I'm not going to be sucked into saying this is resistance. Instead, I'm going to say, what's the next objective on the upside that this market might be gunning for, up near 78, 79 bucks a share. And as long as this shorter term trend continues to exert itself with these higher highs and higher lows, I'm going to give it the benefit of the doubt and look at it as innocent till proven guilty. Yes, it's at a potential resistance level, but right now it's just potential. It's not showing any signs whatsoever of resistance, unless you want to call, hitting daily R2 here at the end of the day and a little bit of profit taking. If you want to call that resistance and read into it on a 1 minute time frame and make your market calls based on a 1 minute time frame for one day, I think you're going to get chopped up a lot. But the bigger picture says it looks like it still wants to continue to move higher. And the semiconductors have really been the leader. They have been the leader for a while here. This group has been at the new highs for a couple weeks now. They consolidated up in here. They looked like maybe they were going to, testing this 20-day moving average again, that maybe it was going to lead to a bigger sell-off. But obviously we had the momentum come back in, and it's innocent till proven guilty. It looks like the semiconductors are likely headed for somewhere up in this area, 33 to 35 bucks a share. We have those 2007 lows, and let's back that up another 100 weeks just to get a better perspective on that. So you can see that this has been actually a pretty important level over the last several years. But here's a potential resistance level. Doesn't mean that's where you should automatically sell short, but you have to think that getting up towards that $33 to $35 level, maybe some longs are going to start taking some profits, some shorts are going to start saying, hey, we'll take a little bit off here and that sort of thing. But until it actually, on a shorter term time frames, shows signs of being distributed and shows signs that the sellers are gaining control, it's innocent till proven guilty. It gets below that 5-day moving average. The light goes from green to yellow. If it breaks those bigger support levels, then the light goes to red. I mean, not to liken it to something that's simple or what a lot of people do, but that's really it's. You should be long right now. I've been talking about the IYR as a potential warning. I said it's not something that you want to be short, because still the bigger picture on the weekly time frame, unless we got a breakdown from here. But the weekly time frame still bullish looking. So on the daily time frame, it says be cautious in here, but we got back above that important level, and we're holding above it for now. So the IYR is kind of back to neutral on a daily time frame, I guess you could look at it. The home builders, as we know, they're right up against this this prior level. Making past 17 bucks a share. Looks like 17.5 continue. Someone's asking me. Oak Rapiz is asking me to take a look at the financials, and I commented yesterday to subscribers that these financials really, I talk about them a lot and say that a lot of people assign a lot of value to the financials in the market. I prefer really looking at something like the semiconductors, maybe because I look at or I trade more growth names and technology names, but the importance of the financials has been vastly overrated for the last 12 or more months, or let me just say 6 or more months. And it's been a very confusing trade here over the last 1 month. You look at what's happened. It looked like, well, maybe it's going to break out and continue to move higher. Instead, it continued lower. And now we're getting, I think that a lot of longs sold out based on it breaking back down, and you got a lot of new shorts in there. So we faked out the bulls. Now it appears we faked out the bears, and maybe we're just heading into a bigger, wider range. But to me, the financials are very confusing. So I just simply don't trade them. If I don't have a clear handle on it, then I don't trade them. Now, if you look at what we were talking about on Wednesday as well, which was this level, about that 1460 area, we were talking about how the downtrend line starting last week was broken. That didn't mean the reversal was in. It meant that now we're going to look at this market as more neutral. Then it breaks the higher high, and then we have this series of higher highs and higher lows. So if you're trading the financials, I would think that about 1490 is an important level that you would want to see hold as support. And we'll probably head up towards that 1550 level. It just seems like there's a bullish force in this market that's going to ignore every piece of so-called bad news. I kind of made fun of Drudge Report last night because there was a headline on there that said if something doesn't happen, I don't even remember what it was, by December 15th, it has the potential to crash the market. And I was looking at that saying, is this just another brick in this bullish wall of worry? Because the market climbs the wall of worry. It doesn't mean just be bullish, run out there and buy everything. It seems to mean that based on price action, but risk management is always first and foremost, of what we should consider. And as long as we're managing risk and aware of where we're getting involved in a stock and making sure we're not buying it after a move has occurred or into a level of bigger potential resistance, we don't want to be the last guys to the party. Instead, focus on the stocks that haven't quite moved yet, stocks that still look like they're poised to continue to move higher. They've undergone a consolidation like InterDigital. They've got a nice weekly chart, and then you look down to a 10-minute time frame and they break a little bit of resistance and that sort of thing. These are the types of stocks you want to get involved in these areas. And these are the types of stocks that I've been talking about. The biggest one, I've traded this Vico pretty good recently, and we were talking about this on Wednesday as well. Today I had seen this stock clear some. What happened in here? It was shaky at first. It came up to this level, and then I reset my alert on the stock to $45.35. It triggered that alert right here, and I ignored it. I just completely ignored it, just watched it go without me. And that's part of what's trading too. But I'd reset the alert somewhere in here because it was consolidating above the VWAP, had a nice tight range, and I was thinking, well, maybe it can break these highs and then continue this bullish movement on the larger time frame, which it did. But no one's going to catch all of the movement. That's not my point. You're not going to catch all the trades, but the point here is that there's a lot of opportunity in a lot of different names. I mean, look at this Avis that went real strong this week. Foster Wheeler was a big move. We spoke a lot about the coal names on Wednesday. Look at Arch Coal and the move that it had this week. Look at JRCC and those Chinese names, the LLEN and PUDA. These coal names have had these huge rallies here, and these aren't typically and the aluminum, the coal and aluminum CENX. These are not typically stocks that move like this, but when they get going, you can't look at it and say, well, it's just a coal stock, or well, it's just a company that makes automatic dimming rear view mirrors. You look at it and say, well, here's an opportunity. What's the psychology? The psychology is the longs have a good stock here. It's up at all-time highs. Where's the source of demand going to come from that will continue to propel the stock higher? And a lot of times in this environment, that is the shorts, the people who are betting bearishly and get trapped, and then they're forced to buy in. They provide some of the real powerful upside potential in the market at this stage, basically. So I think I reviewed all the sectors that I wanted to talk about. If you guys have something you want to take a look at here before I call it quits, go ahead and type that quick into Twitter. I will just give it a minute to get in there, but maybe it's just a Friday afternoon and everyone's feeling happy with their gains this week. How about a look at for sale? We take a look at BBRG. Let's see, BBRG. Can't say I know that name. Usually I know them, but Bravo Restaurants traded 81,000 shares today. The average over the last 20 days is 150,000 shares. Sal, you're on your own with that one. I can't help you. It's just too illiquid to take seriously. It's in an uptrend here on the 10-minute time frame, but again, it's just I can't take it seriously. At least 500,000 shares is what I would say. Let's take a look at BG for Jake's. BG, this is Bunge Corp. Bunge broke some resistance here today. So it had been holding support at the higher lows at this rising 50-day moving average. It broke resistance today on a nice increase in volume. You back it up to the bigger time frame and see, where's the potential for this thing to run to on BG. And BG, looks like the next level is 65. If it can clear that, then you're probably going to just continue to grind higher in this thing. So Bunge, it's in a good uptrend. Where, I would say if you're not in it, maybe you get a slight pullback on Monday towards 63.50 and then buy some strength. Otherwise, I would say set your stop underneath one of these higher lows. That makes most sense to where your risk management in the market basically. So let's take a look at Apple for trading low. What can you say about Apple that hasn't been said? I can't add any value in Apple. It's in an uptrend. It's consolidating. Look at this thing. It's making this ascending triangle on the weekly time frame. It's in a huge uptrend. It's everyone's going to buy a bunch of Apple products for Christmas most likely, and Hanukkah and everything else, Kwanzaa and all that. But it tested the rising 50-day moving average. If it breaks out here, it's probably just going to continue to move higher. It's in an uptrend. It's innocent till proven guilty. How about a look at CTSH? We'll take a look at Cognizant. It's in an uptrend like everything else in this market, right? It's at all-time highs. It's a little extended short-term, I would say, but at new highs. And on the 10-minute time frame, it's consolidating these gains of the last 2 days. Maybe it needs to digest these gains just a little bit, but I'd be looking for a buy point, whether it's going to correct through time, continue to correct through time and then break out, or maybe pull back, or wait for this 5-day moving average. It's either going to, I think, pull back to the 5-day moving average or wait for that 5-day moving average to catch up to it. Then you look for consolidation and buy some strength, but innocent till proven guilty. It's in an uptrend. It's how about a look at TIBX? And you already asked 3 of them. We're not going to do that. We're going to go on to the next guy, which is Stagehand Trader, and we're going to look at Line for Stagehand Trader. Let's take a look at Line. Line here, Lin Energy LLC, Limited Liability Corp, etc. It's in an uptrend. I'm just going to get rid of that flash crash stuff there. It's in an uptrend, trades plenty of volume, and it's a partnership, which I don't like to trade the partnerships because they have some funky accounting stuff that happens. But higher lows, I think if it can break this 37.10 area, it probably continues higher with a stop probably near about 36.45. How about a look at Google for Allah's, what was this? I can't read your name. Anyways, let's take a look at Google. You know who you are. Google broke down this, from this gap recently. By the way, no more questions because I'm going to wrap this thing up here in just a couple minutes. But it's still got a rising 50-day moving average, which makes me want to say innocent until proven guilty. But I think Apple or Google rather, is just a little bit too confusing here. You have conflicting messages. We have this gap which didn't hold. It came down, didn't quite fill in that gap, but now it's trying to recover. I truthfully can't get a good handle on Google, so I would say that if it can get back above 585-ish area, which is now this prior support, which has the potential to become resistance, then it could pave the way for a recovery here. But right now, it's a little too early to really think that it's in a low risk buy point. It's you look at this downtrend line. Here's this prior support at 580. So if it can work its way back up above that, we get this 5-day moving average rising. Then I think you could start to consider it as a long. I wouldn't short it definitely, but that's the way I would look at it here. How about observe the tape? Wants me to take a look at Slabs, Schlumberger, SLB. Really broken record. It's in an uptrend. It's innocent till proven guilty. Where are we right now? It seems extended. It's had a big rally, but the path of least resistance is higher. Here's where we are. We've just run from 55 to basically 80. Almost 30 points here.
But Schlumberger, let's take a look at that 10-minute or daily time frame. It broke out on a gap. It's continuing higher. I wouldn't want to be chasing it up here. It gapped lower today and recovered beautifully from that. So, when it does that, if you can buy them right away as it's back above VWAP and hold on to them, then that now we've got this level here. Looks like an important near-term higher low, but it's in an uptrend. It's innocent until proven guilty. You have to be a fool to try to short it, I think. And again, it's innocent until proven guilty. Let's take a look at Coinstar for Cobra Kai. Coinstar is it slowed down this week. I had I think, on Monday, I had sold the call options that I had in this thing. But Coinstar on the longer term time frames, still in a very nice uptrend. So I think it's still going to continue higher. You look at this daily time frame, it's finding support at the 20-day moving average. This prior resistance also acting as support in here. So I think that this is an important level. If we break 62 next week, then maybe it's going to then this gap and run move might fail the way Google's gap and run did. But until it fails, you don't want to be looking for a short. Instead, you want to look at it and say, this prior in the daily time frame, you can see this. This is much clearer because we cut through that the tail of that candle there. But looking at a 30-minute time frame here, we've made this week these lower highs and lower lows. Now it looks like we have a higher low right in about the 63.5 area. If we can clear, probably, let's look at a 10-minute time frame, get a little bit more clarity here. So we had these lower highs and lower lows this week, right? And we were below this 5-day moving average. Now I think that probably what we need to see is a recovery back up through 65-ish. So if we can get a rally up to 65, pull back a little, test the 5-day moving average, which will be rising, and then break the 65, that would be ideal. Then I think that Coinstar will continue to rally, and I think that the people who are short in there are going to continue to be pressured. If you look at the Coinstar short interest, you can see they have been pressured. The position went from basically 11 million shares on September 30th to November 15th, down to 8.1 million shares. So that's only through November 15th, but the pressure continues. But there's still 8 million shares short this. That can't feel too good, and they become potential buyers that could really fuel the crazy upside movement in this stock, similar to DEC or similar to what might still be coming for Lululemon and some of these other names. But when the momentum comes out of them for a little while, it comes out of them, and then you have to look at it. It's like a CMG, which has been a gap and run, and squeezing the shorts in there as well. And now we've had 2 days of weakness in this, and all kinds of people are calling the top in CMG, which I think is foolish. Just because you get a big point number down, but a stock like CMG is going to need to heal, and that's so until they break, when they break these support levels and those 5-day moving averages, you move to the sidelines. You don't know if they're going to continue to move lower, or you don't know if they're going to rally back up. And Taekwondo is telling me there was a big move in Delcath. Let's take a look, because I remember someone asked me about that on Wednesday. Perhaps it was him. And I don't see the big move in Delcath. I see a nice looking chart that looks like it could potentially get moving higher, but and we spoke about this because I remember this one. I said this is a perfect, stair step higher, resistance becoming support here, and that's what we have right now. So Delcath, if Delcath can clear these levels near about 1035 to 1050 next week, then I think Taekwondo that you might see a big move in Delcath, but it's obviously not there right now. Let's take a look. This will be the last one, which is U.S. Steel for 99.2C, and U.S. Steel is moving higher as well. I was actually in earlier STLD. I thought this one was trading a little bit better. I kind of like STLD, and I don't know if I'd mentioned that the other day, but STLD still looks like it has room to run, maybe up towards $18 a share, and U.S. Steel still looks like it has room to move as well. But U.S. Steel has broken some important resistance. Looks like it's probably should be able to continue to move higher up towards 55-ish area. So the question then becomes, where do you get involved? Can you control risk? Is there enough? Is there a low risk entry point? Well, realistically, I think that this was so this is what you call basically the cheat buy right here, whereas a lot of people wait for it to break the prior high. So when we look at the daily time frame, a lot of people look at it and say, well, if it's going to break this high, then I'm involved. But if you get a head start here as it comes off that rising 5-day moving average and makes that first higher high in the intermediate term time frame, and we have a pattern of higher lows below it, that's similar to what I think that Taekwondo's DCTH can do, which is we have these higher lows, we have a good looking daily chart, so it's a good looking daily chart, DCTH, so we want to keep that on our watch list. But we don't want to just buy it because it's just sitting here doing nothing. It's consolidating, but we want to keep it on our list and say we've got the higher lows. Now if we can put a higher high on it right here, I'd probably buy it above 1035. A lot of people will wait for 1050 for an official higher high on that daily time frame, but that's just preference, whatever you think you want to do there. So anyways, I'm gonna wrap it up there. I think that's all the questions I have. If I somehow overlooked it, I apologize, but anyways, everybody have a great weekend, and we'll talk again on Wednesday.